This is Market Wisdom for Traders, delivered by Tuegbe Ezoge. Today, we're on episode 49. You can check our previous broadcast for more videos. It's for forex traders, stock, equity, futures, options, commodities, and all chart-related trading. The advice to subscribe, share, and ask questions. We are available for training and account management. We have been trading close to 20 years now, and we have what it takes to guarantee you consistent profit return. It is not whether you are right or wrong that is important, but how much money you make when you are right and how much you lose when you are wrong. When you are really right on the market, maximize the opportunity. Soros has taught me that when you have tremendous convictions on a trade, you have to go for the jugular. It takes courage to be a pig. It takes courage to ride a profit with huge leverage. As far as Soros is concerned, when you are right on something, you can't own enough. Soros is also the best loose taker I've ever seen. He doesn't care whether he wins or loses on a trade. If a trade doesn't work, he's confident enough about his ability to win on other trades that he can easily walk away from the position. There are a lot of shoes on the shelf. Wear the ones that fit. If you are extremely confident, taking the loss doesn't bother you. As long as I'm in control of the situation, that is, as long as I can cover my position, there's no reason to be nervous. If you make a mistake, respond immediately. The ability to accept unpleasant truth, in other words, market options or events, counter to one's position, and respond decisively and without hesitation is the mark of a great trader. The queen in chess, which can move in all directions, is a far more powerful piece than the pawn, which can only move forward. The market is a stern master that seldom tolerates the carelessness associated with trades born of desperation. Trials discovered that the folly of following the recommendation of financial columnists. As a result, he decided to educate himself by devouring all the stock newsletters and financial magazines he could find at the local library. It was during these childhood years that he began to develop the basic market philosophy that will serve as the core of his approach in his later years as a security analyst and portfolio manager. It seemed logical that if a company's earnings were growing over a long period of time, its stock price had to go in the same direction. It is not that easy to buy back a good stock once you've sold it. So there is a great advantage and comfort to being a long-term investor. Even if I think that a stock I hold will go higher. If I believe another stock will do significantly better in the interim, I will switch. I want the fastest horse, even if my first horse is still trotting in the right direction. Yes, but even more importantly, I want to make sure I get off the horse if you start heading in the wrong direction. Most people believe higher turnover is risky, but I think just the opposite. High turnover reduces risk when it is the result of taking a series of small losses in order to avoid higher losses. You can't make a harvest in the winter time. We probably have more losers than winners, but to cut our losses, charts are a very unemotional way to view a stock behavior and potential. Stocks that witness a huge one day move tend to keep going in the same direction over the near term. This brings us to the end of episode 49 of Market Wisdom for Traders. Remember to subscribe. You can contact us on 080 375 97085. Via call or via chat. We are available for training, online or physically. And we are available for account management. Thank you.